Have you ever gotten a renter's insurance quote and just been baffled? Why is it one price for an apartment but a totally different price for a house, even if they're like right down the street from each other? Well, it all boils down to this giant puzzle, and the key piece is one little word: risk. And today, we're going to crack that code together. Yeah, you get that quote, and the number can feel like they just pulled it out of thin air, right? But believe it or not, there's actually a method to the madness. And it's all about the deep down fundamental differences between living in an apartment versus living in a house. Okay, so let's just dive right in. The big question: why does the quote for a house almost always seem to come in higher than one for an apartment? It's not just because it's bigger, more space. No, it's way more about how insurance companies literally see the world. For them, everything, and I mean everything, is about calculated risk. See, for an insurance company, your place isn't just a home. It's a risk profile, a collection of data points. And that price difference we're talking about, it's really just them adding up all those different little risks to figure out what your final bill, your premium, is going to be. And this is super important to get. Your premium is not some flat fee they charge everybody. No way. It is a totally personalized number just for you and your place. The insurers look at every little detail and, essentially, they're placing a bet on how likely it is that they're going to have to cut a check for a claim from you. Okay, now this is where it gets really interesting. Let's look at these two profiles side by side. In an apartment, you've got what's called shared risk. Sure, a fire could start in your neighbor's unit, but you've also probably got building-wide safety nets like sprinkler systems or a secure lobby. But a house, that's a whole different ballgame. It's got a bigger footprint, more windows, more doors, just more ways for things to go wrong. And don't even get me started on liability exposure. We're talking about someone tripping on your private walkway. That's all on you. But wait, there's a wild card here. A factor that can sometimes trump everything else we've talked about: your location, your zip code, the local crime rates for things like theft and vandalism. That is a massive, massive driver of your premium. And it doesn't matter if you're in a fancy high-rise or a quiet suburban house. This one's a game changer. All right, enough with the theory, right? Let's talk about what really matters: the money. How does all this risk calculation actually translate into dollars and cents? Just how much more are we talking about? So for an apartment, you're usually looking at a pretty friendly number. The starting point is typically right around $12 a month. Pretty manageable, right? Let's call that our baseline. Now switch over to a house, and that starting line nudges up to about $15 a month. I know, $3 doesn't sound like a huge leap, but remember, that's just the starting point. And that little jump, it's reflecting all those extra risk factors we just went over. And this chart, this lays out the whole story perfectly. Just look at the personal property line. Insurers basically assume if you're renting a house, you have more stuff to fill it with. So that coverage gets bumped from, say, $20,000 up to $30,000, $40,000, even $50,000. And then look at liability. If your house has a yard, a driveway, maybe a pool, that standard $100,000 in liability coverage, probably not going to cut it. So you go for $300,000 and boom, your premium goes up too. Okay, but here's the good news. You are not just at the mercy of these numbers. The price is not set in stone. Now we get to the fun part, the actual practical things you can do to bring that premium down, whether you're in a house or an apartment. This is your smart savings playbook. And the first, maybe the most powerful tool in that playbook is your deductible. It's pretty simple, really. It's a trade-off. You tell the insurance company, hey, if something bad happens, I'm willing to pay the first $1,000 out of pocket instead of just $500. In return, they reward you with a lower bill every single month. It's a seriously powerful lever you can pull. And here they are, the big 4 universal strategies that work for pretty much everyone. Number 1, bundling with your auto insurance. This is almost always the single biggest discount you can get. Easy money. Number 2, we just talked about it, raise that deductible. 3, believe it or not, a good credit score really helps. And finally, and please listen to this one, do not just let your policy auto-renew. Loyalty almost never pays off in the insurance world. Shopping around every year can save you some serious cash. Now, if you're an apartment renter, you've got some unique tricks up your sleeve. Your building's features? Those are your secret weapons for getting discounts. You've got a doorman? Tell your agent. Gated parking? Mention it. A sprinkler system throughout the building? You better believe that's a discount. Make sure your insurance company knows about every single one of these things, because to them, those are all risk reducers. Okay, but for all you house renters out there, the strategy's a little different. Your number one priority has got to be liability. All that extra exposure from a yard or a private driveway, it means you should really, really think about bumping up your liability coverage to at least $300,000. It is such a smart investment. And on top of that, any security you add yourself, we're talking deadbolts, smoke detectors, even a video doorbell, can shave a little more off your bill. So we've gone through building types, coverage amounts, all these discounts. What's the big takeaway here? What's the one thing to remember? It might just be this. The most important factor isn't what kind of door you have, but what street that door is on. And this quote, man, it just nails it. The specific risks tied to your neighborhood can totally, completely outweigh the general risks of whether you're in a house or an apartment. You heard that right. A house in a super safe, low-risk area could absolutely be cheaper to insure than an apartment in a high-crime neighborhood. In this game, location can definitely trump lodging. All right, so now you know the factors, you know the variables that insurance companies are looking at, and you know the levers that you can pull to bring your costs down. So the next time you're on the phone with an agent or you're shopping for a new policy, what's the one thing, the one discount or detail that you're going to make sure you ask about?